All right, well, we talked about the opening bell, and before we know it, the closing bell will be here. We're just about 20 minutes into the start of trade on this Monday. Goldman Sachs is going to be on the podium at the NYSE this afternoon to celebrate a launch of new products. And joining me now with more is Sylvia Ye. She's a co-head of Municipal Fixed Income at Goldman Sachs Asset Management. Sylvia, welcome.
Thank you for having me.
It's great to have you here at the stock exchange, of course, ahead of the big event this afternoon. What brings you here? What innovations bring you to the NYSE today?
We are so excited to close the market today, and more so just to really celebrate the evolution that we're seeing in the muni bond market. If you rewind in history, there were individual bonds, there were mutual funds, there were separately managed accounts, there were ETFs, and now ETFs are evolving as well. And that's all a result of clients wanting and demanding more, not just access to the market, but how we access the market. And we do bonds, muni bonds, really well at Goldman Sachs. So to be able to bring our deep research credit bench that we have and our active management in the form of ETFs for our clients and a broader sweep of clients out there than the traditional, we're super excited to be able to deliver that.
How does an investment or a fund like this really fit into someone's holistic portfolio?
Yep, and that's the thing. You can't make a general comment, right? It really depends on what the client is looking for. You have certain clients that just want access to the muni market, and there you can buy a passive ETF. You can have some clients that really want the active management. They're looking for a total return component of their asset allocation, and there you can get it through mutual funds, ETFs, and separately managed accounts. I think what we're doing with our actively managed ETFs is putting a different spin on that and combining the best of all of the different existing vehicles into the new trend of flavor that we're seeing in ETFs. Credit, duration, and just dynamic day-to-day management in the most tax-efficient way possible.
Yeah, so talk to us more about that tax-efficient element. For our viewers watching, wondering how this might be beneficial to them in that regard, what would you say?
Yep, well, ETFs have an embedded tax-efficient vehicle and how redemptions and creates happen and flows move back and forth. Particular to our ETFs, we have a national fund and we have a national fund, GMUB, and we have two state-specific funds, G-Money and G-Cal, that are going to focus specifically on those high-tax states, New York and California, and predominantly be fully invested in those states, which is going to give a true benefit to those types of investors. And then we also have an ultra-short version, which Gummy, that's going to target the front end, the very front end of our curve, and offering clients the opportunity to maximize those short-term interest rates.
Who's going to be joining you here at the exchange today for the closing bell?
We're so excited. So we're going to have the whole team. Scott Diamond, who's my co-head, will be up there with me, in addition to everyone who's had their hand. Joe Wenzel, portfolio manager, Ed Polinsky, who runs our SMA business. Everyone from front to back who has had a hand in bringing this innovation to market will be up there with us to celebrate.
Why now? Why is now the moment for this?
Yeah, it's really picking up on the trend. I think one of the things that we did really well at GSAM is listening to our investors, and these funds were built for purpose, to follow and deliver what they're looking for. If you look at the flows and what we've been seeing year to date and over the last 12 months, about 40% of funds going into ETFs are going into active ETFs. And if you look at the muni market as a whole, yields are higher than they've been in a really long time. Relative value is telling us we should be leaning into munis. The credit fundamentals, the backdrop are strong. So all of those boxes are checked to tell us that this is an opportunity to allocate to municipal bonds. And now it's just a matter of how we want to.
And what would you tell our viewers in this particular market environment, Sylvia, where it is a bit choppy?
Yeah. Also a difficult question to answer, because choppy might be conservative and concerning for one investor and an opportunity for another. The choppiness is really going to come on the back of the potential policy changes that are coming out of, well, the Fed with interest rates policy, out of the administration, and you have to look at how some of those changes will impact individual sectors. So some that come to mind and that have been in the news are going to be higher education, are going to be hospitals, are going to be private activity bonds. So those are the things that we're double clicking in and really digging deep to see if we're concerned or if there's opportunity.
Sylvia Ye, she's a co-head of Municipal Fixed Income at Goldman Sachs Asset Management. Sylvia, thanks so much.
Thanks for having me. Have a good one.
You too.
Thanks.